So welcome. This is our last video, Friday Insight video of 2020. And hopefully 2021 is a much better year for everyone. I'm Leslie Cliff, co-founder of Genus Capital, and I'm here today with Wayne Wachell, our Chief Investment Officer and other co-founder. We have a couple of insights for the week. Wayne, what happened in the markets this week?
Well, there was a lot on the vaccine side, and it was launched, positive things coming out of that, and people looking to the future, good things. But also, just right now, we're in the peak of the COVID, and that's having an impact as well in terms of shutdowns and issues with ICUs, and really big concerns. And so the market went sideways. There was some volatility down, then back up again towards the end of the week. And it was more a growthy kind of week where some of the COVID winners did a little better than the value type trades or cyclical trade because of the concerns of the COVID. So the value trade we think is going to play out into next year, but it's going to be 2 steps forward and 1 step back until we get some clear sailing through into the spring, probably, post or once enough vaccines get into the population to impact that effect.
But value's had a pretty good quarter, hasn't it?
It's had a very good quarter. It's come off the bottom very nicely, but it's like I said, 2 steps forward and 1 step back. But it's making progress, and we still think it's lined up for next year. If you look what's going to happen, based on our models are all positive now for the markets. They're positive for cyclicals, positive for commodities, and if you look into next year, you can see Dr. Copper taking off. That usually leads bond rates. You look at money supply globally is growing dramatically, which usually leads economic growth. And we're seeing a forecast for next year of around 5 and 6%. That means higher bond rates. I'm not talking about crazy high bond rates, but bond rates going higher at the long end. And at the short end, the Fed's going to be on hold. So that's a steeper yield curve. And that usually is good for value stocks. It's good for banks, for example, and good for value stocks. So we think this trend is going to continue. But right now, we're hitting a bit of a speed bump with the COVID spike here. So,
Wayne, what about there was big news in the cannabis sector in Canada this week? A big merger. Maybe tell us a little bit about the merger, or a little bit about Genus' view on the sector, and if we own those stocks, or when we might own those stocks, etc. What are your views there?
Well, I guess the short and sweet is not yet. It's too soon. They've all been blown out. Tilray, for example, which was involved in the merger, was about $150. I think it's now down to about, I think today on the news it popped about 15% or something like that. It's around $9. So they all had serious haircuts. They were driven up by speculation, by sheer speculation, lousy business models, and great promotion, let me put it that way. And it went to crazy prices and then came back down to earth. The big hope now is, of course, that it's going to open up. The U.S. will open up, and there will be this green wave, as they say in the U.S., where the states will start opening up and allowing more and more cannabis into the place. It's going to take some time. Will the Canadian players be the winners in that scenario? I don't know. I think it's going to be bigger players from the U.S. that are maybe involved in alcohol or tobacco already that might be the winners anyways, and they still have to get their acts together. And we're also at Genus, we're 2 minds on these kinds of stocks. We could play them longer term for our more conventional clients, but for our sustainable clients and ESG type clients, we're not going to play them right away. Really, if you look at a cannabis stock, it's really a composition of 3 different things. It's like a tobacco stock, a alcohol stock, and a pharmacy. And so, until we see a pure pharma play in the cannabis, we're not going to buy those stocks for our ESG type clients. So even if they are good returns, just because of the health effects on the tobacco side, if you will, or alcohol side.
Yeah, I find the whole thing kind of funny. This is the last week of insights, so I want to make this actually a little snippet of the year's insights. We're having a seminar with the 2020 in review and 21 forecast. It's going to be a webinar this year, January 28th. You'll get your invitation. But I just want to give you a short preview of the review of 2020. And I had talked about this last April, just I just want to review what happened at Genus and our equity portfolios in 2020, just really quickly. I'm really proud of our investment team, Wayne and his team. We did not see the pandemic coming. I recall somebody asking a question at our seminar last January, what about this flu in China? And the answer was, well, unless it affects consumer consumption, it's not an issue. And of course, so we were not visionaries in what's going to happen there. But once it became apparent that this was a pandemic, global pandemic, the investment team went to work. They were not frozen at the controls, and they made big sector rotations. You probably recall, Wayne, you sold a lot of energy stocks, a lot of bank stocks, and bought a lot of healthcare stocks, a lot of IT stocks, a lot of consumer staples, the COVID winners. Those trades were all done in February and March. What's interesting to me is by about May, June, we were already starting to unwind some of those COVID trades to get back into more conventional value stocks, more economically sensitive stocks, materials, and industrials particularly. So we didn't sell the IT. And we're still underweight banks, we still are underweight energy, but we've really got this barbell happening that you put in place in about June. So I just want to say kudos. Too bad we missed the big story we didn't sell in January, but you certainly did a great job of pivoting and getting on top of things.
Well, at the beginning of the year too, we were very positive on the economy and the markets. We had a slowdown last year in 2019. And we were coming out of that, and the Fed was already printing money like crazy. Our models were all green, and saying go. And we loaded up. We were ready for the economic sensitives, and boom, when we got hit, And so we had to skate fast and made a quick recovery and got out of some of the losers. And we've rotated. We now have more cyclicals in the portfolio now, I'd say, than technology. We're there. We still haven't gone down into that bottom rung of the losers, the airlines, the hotels, the shipping companies. We're staying away. Those might have some solvency problems, and our models are still saying stay away from these ones there. So we're watching, and looking for signs, but still we have enough. We think we have lots of value, and we have enough financials and industrials and materials that are doing well. And we think there's going to be a global recovery next year, global acceleration. That's going to be good for cyclical stocks, and it should be good for Canada as well.
Good. Well, I think we're going to stop there, Wayne. I take an opportunity to say to our clients a big thank you for being with us this year and asking more questions, being more involved. It's been an anxious time for everybody. I don't fly anymore, but whenever I did fly, when the plane landed and the pilot says to everybody, we know you have options and we thank you for your business. I always think of, I wish I could say that to all my clients. So we know you have options and we thank you for your business. But I particularly want to just take a moment and say, Merry Christmas, Happy Holidays, all the best. I know all of us will be missing family members over the holidays that we would prefer to see and won't be able to see. And we're thinking of all our clients and wish you the very, very best. So please put in your calendar January 28th. You'll get an email about that, but that will be our year in review and the forecast for 2021. Wayne, would you?
I would say all the best over the holiday season, and we're glad 2020 is behind us. We made it through that. We all survived. We survived it, and hopefully it's going to be a better year together. We'll be next year together with our family and friends in person. Hopefully, come mid-year and third quarter of next year. But all the best and a better 2021.
Thank you very much.